Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh, and morning, everybody. The 11th. And we've got a real dumpster fire going on out there. Man, Okay, so yesterday, when we left off yesterday in the ES, we were kind of having this little bit right up here. Like let's zoom in here, okay? See, here was what we traded, and it came back, and we were like, okay, maybe it's okay, maybe it's fine. And then this happened, and then this happened. Oh man, this into the close was like, holy crap! I was watching it. We caught what was it? Did we buy? No, we caught some of this. We caught some of this. It kind of like we broke even on the E-mini. I was having trouble on the treasuries, and I'll talk about the treasuries in a second. But so I kind of left it alone. But this was just an insane. Look at this. This is like 80 points down. Like, that is not okay. 80 point move. That used to be like, the depths of the financial crisis kind of behavior. So pretty cray. All right. And then in the overnight, it extending its losses. Now, what's going on? Well, it sure feels like it come out of nowhere, right? Hold on a second. I have my microphone here. But everything that I'm seeing is citing concerns about inflation. So we come over into the treasuries, and it certainly kind of pans out over here in the treasuries. Yeah, you realize this move up here off of the news is pretty extreme, okay? But this move down, this is a pretty solid move down. And this, again, it started later in the day. I actually, I tried going against it a little bit and then turned around and went short and made up a little bit of it. So I did okay in the treasuries, but I mean, lucky that it moved that far. So why is it moving? Well, people are talking about inflation concerns and everything else, but there's a big thing I saw in the treasuries that I don't think everybody caught, which is that Amazon did a huge bond issuance yesterday, and corporate bond offerings affects the futures because they come in and they hedge. Okay. So I believe that is part of why we had this move. And then overnight, still some inflation concerns. They moved down a little bit. Oh, I cut myself. How did I do that? Ouch. Okay, I'm going to have to go fix that. Geez, I know that was super random. Okay, oil kind of getting hit off of all of these concerns too. And now this is kind of where it gets interesting. So silver and gold, they handled things okay, as you would expect if the concerns are inflation. Although if the concerns are inflation, I really would like to see them higher, like silver above 28. Okay, but look, copper took a big hit yesterday. I'll come back over here. We come into here. Soybeans took a hit yesterday. Corn took a hit yesterday. They're recovering it, but are there concerns? I mean, it was like everything got hit. Everything got hit yesterday. It was really something else. And when you come in and you look at the dollar didn't really move. I mean, there was some flight to safety, but it was just like all the money disappeared. So pretty crazy. Yeah, Keller says the pipeline certainly didn't help with the inflation worries. I absolutely correct. It's just kind of bonkers. I think that there's probably a little bit more going on than just that. So here's one thing, is that we know for the past 2 weeks that the big guys, the hedge funds in particular, have been selling. So I think that they're kind of pushing it a little bit now, right? I think that's a part of what we got going on. All right, well, so what do we got today? Today we do have ISM New York, JOLTS, and we're doing a webinar today. So the CME is putting on a webinar. So we'll give you the guys the link, and well, actually, let's come over here and go find the link for that. The webinar. Where's the webinar? Oh, new C-vol volatility indexes. That's nice. Important details. To join the event, click this link. Okay, I believe this is the link. I don't know. Tell me if that link works. That is the link. Okay, I don't know how I did this, but I cut myself sometime this morning. What would I have possibly... first of all, how do I cut myself that badly and not notice? I'm so clueless. But what would I have cut myself on? Okay, well, I'm going to go wash it up, all right? Okay, so anyways. The indexes are just getting obliterated here, man. Look at this. Well, I'm not. So the whole thing here is obviously, if I was maybe a little bit more put together this morning, I could be short right now. But when you come in and it's going like that, I think you kind of gotta wonder a little bit what we can do there. All right, let's see here. The text-to-speech not start up. Let's try that again. Zero Hedge says NASDAQ will keep sliding until ARK is archegioed. Wow. ARK funds sold a third of their Apple and bought more of their own ETFs amid continued rout. What? Why would you just put it back in? Adele3137. Sorry, by the way, I disappeared there. Oh yeah, it won't let me put that link in because it's too long. Did you say hedge funds were selling? Yes. So hedge funds, as my understanding and as reported by Zero Hedge from many prominent Wall Street analysts like JP Morgan, have been net sellers over the past week or two. So they've been selling and retail traders have been buying it up. They've been buying the dips. But you can be careful. I mean, the thing is with that kind of a situation, right? We've got to be aware and ready for short covering rallies, right?
Winston's Mom says, TTS dodo coin. Danke, that feels so much better.
Oh boy. Let's see here. Do I still got... Okay, financial juices are running. If prompted, enter password, yada, yada, yada. Okay, well, I'll close that tab for now. I guess today is one of those days where we're going to have to monitor the individual stocks, so I really want to know what I caught myself on. Oh man, Tesla is down overnight. Ooh boy. Wait, I'm showing a 1 minute chart. Let's show a 5. Holy shnikes, they're down below 600 now? Is it bigger than the paper? Like the... Oh, so it was about... I'd say it was about that big. You know? It wasn't very big. And it was a deep cut too. It was a relatively, I would say it was a relatively deep cut. Is that a yearly low for them? It is. Oh yeah. Okay, well, so they're not below. Okay, so the next big steps that we get is like in the below 600 and 550 areas. Yeah. I remember. It's funny it's been this long. Wait, was this 2020? Yes, it was. I don't remember if it was this one or this one. I think it was this one. No, it was this one. Okay, so I remember going like, this all happened, and I was like, I think I'm going to short Tesla. So I shorted it, and it worked out. But then, like, I said, oh, well, there are options, I'll hold on to them, and it came back up and basically didn't make anything off of it. But then I didn't... This was the funny one. Do you remember this when I was like, it gave me the stock or whatever? Maybe it was later, because then the thing that was really funny was that it gave me shares short. It gave me shares short, but then the simulator didn't account into things correctly, the split. So it gave me all of these shares from the split the wrong price, and it actually ended up making a ton of money off of that transaction, when the reality was that there was an error in the sim.
Winston's mom says Reuters, fangs and bets sell off spooks world stocks, someone please boomer's plane or get me a Halloween costume. What does this mean? Speculator Seth.
Okay, well, so Fangs again is like Ford, Amazon, Netflix, Google, and I don't know what. I think the S is just, apostrophe S, but those big tech companies, right? I don't know what they mean by bats. Maybe they're talking about the exchange, but so coming in here, ARK was down 5% yesterday, and it is down 5% in the pre-market. Goldman's chief economist Hatzius U.S. GDP forecast has not changed. It says that the U.S. inflation rise will be temporary. Well, he sounds confident about that. Listen, if Hatzius says it, I believe him. I do think there's a possibility that at least the inflation that we are looking at right now probably will be transitory. What I'm concerned about is that we're about to get way more inflation than they expect. And then once that starts happening, then all of a sudden it'll be like, okay, we were wrong about that transitory thing.
Winston's mom says the underlying driver is that there is still a rotation out of duration, higher interest rate, sensitive parts of the market, and this is why tech stocks are. Winston's mom says coming under pressure now, said Mizuho's head of multi-asset strategy Peter Chadwell.
Yeah. Although, so we come back over here. Here's the treasuries, right? They're off of their most aggressive levels of the year, right? In April, they were quite a bit more, Now look at some of these big moves down. Like, look at some of these sells, okay? And compare them to what we got yesterday. This is a little limited. So I think maybe some of what might be going on is that because we're just having such a bender of a down move in the E-mini, that people aren't really sure how to explain it. They see the tech sector going down, and so they're reacting to that. But the yields didn't really increase that much. Well, actually, you know what? Before I say something like that, we should come over and check the tool. I'm starting to think that I just want to have this open all the time. We come over here to markets, interest rates, and then we click tools. I said we click tool. Fine. I'll scroll down and do it. There we go. Treasury analytics. Okay, so I'll read this one out.
Kevin Wimmer says, Seth, I think you are wrong. It's not always hedge fund versus retail. Like there are always hedge fund on the other side to look at GameStop. One hedge fund got slapped but others profited. Like Senvest.
Oh, okay, but the only point of me saying that earlier is just to show that on net, the hedge funds have been net sellers over the past 2 weeks, and retail traders have been net buyers. Now, retail trading activity overall has decreased, so that's also plays into it, right? But I think that the reason why I think it's important to point out that the hedge funds are selling it is just like to identify that flow and why the tape is perhaps behaving the way that it is. It's because the hedge funds, they come in and they participate in this market, in our market in particular, very heavily, right? Pavlov's dog effect, buying dips won't work on past day retail has been trained. We don't go down. Yeah. Well, let me put it this way. As I said this on Gary Norton's video yesterday, which I thought was a good video. He talked about things that he had seen in past bubbles and the research that he had done on those sorts of things. It seems to me that during this whole run, that if you just put on risk, you will make money. Like it's that simple. You just and the more risk you put on, the more money you end up making. And that did not work yesterday. That hasn't really worked the whole past week, really. Like you've looked at with my trading, a lot of what I do in the E-mini on a day-to-day basis, I want to try and trade off of news, but when I don't have a piece of news and I see it going and I see an opportunity to take on risk and it's a good risk reward opportunity, I'll take it. And that hasn't been working very well, right?
Kevin Wimmer says I agree with that. Just wanted to say it's not all. Like for instance in oil you also have situation where 6 times more hedge funds are long compared to short, and even when it drops, some wins.
Well, I'm sure that if you looked at their positions, that there's more hedge funds long than there are short. I mean, that's just the way the market sorts out. But according to the desk, like the report that I was getting this off of, Goldman Sachs, and Delta One desk or whatever it is, basically the guys that execute for the hedge funds have said that the flows that they've gotten have been net selling to quite an extreme, in fact. Zero Hedge retweeting something that it said a long time ago. Inflation will get so high, the market will be begging for tapering, and stocks will actually rise on the news. You know what? That is actually a possibility, and if it happens, that'll be really funny. Let's see here. Just closing that up. So what did I come over here to look for? Okay. So we're looking at the treasuries right now. Okay. So remember when we were the most aggressive prices of the year, it was at 1.6, and right now the cheapest to deliver is at 1.23%. So this treasury analytics tool, it's pretty cool. You can come in. A DVO1 of a basis point is pretty high right now, by the way. 3 ticks. So cheapest to deliver, this is the contract that we trade, right? On the run is like the most recently auctioned out coupon, basically, is my recollection. Wait, what does it say? The star. On the run, determined by finding the security with the latest issue date. There you go. So, the 1 spot 232. This I actually looked into this. So you expect short covering at the open? I'm not sure. The thing that weirds me out about this is hold on a second. Trying to collect my thoughts here. Like, why now? So like the question is, we sold 80 handles on Monday. Why? Did something happen? Was it that supply disruption with the oil pipeline? Maybe, I guess. I mean, that's one theory, I guess. But there wasn't like an event. There wasn't like a news story came over the news squawk and the markets freaked out over that news story. There's not something that the news organizations are really picking up on as the reason it's going down is just turned into general concerns about inflation. Now, here's the thing. Another part that we should talk about or look into here, right? Oh my gosh, fidelity. Sometimes. Move that up a little bit so to cover up the... Okay. So if we come over here to my Forex factory. Okay. Tomorrow we get CPI. Okay. So remember that the previous was spot 6. And the forecast is spot 2. All right. So if the CPI comes out tomorrow and it's spot 5 again, then I say that all of this is justified and they were predicting that that was going to happen. But how many times have we seen it where we're expecting that sort of a thing and then the CPI print comes out and it's not that bad, you know? Like last time around, it was a little bit higher than forecast, right? But it didn't end up being like the end of the world. So I'm just like been a little bit battered too many times off of the CPI numbers. So is it post-traumatic stress syndrome or something? But I'm not just going to be jumping out there being like, oh yeah, it's definitely going to be higher than spot 2. So what happens if tomorrow the CPI number comes out, it's in line with expectations, and then the market continues selling, right? Like, I believe, and the point I'm trying to get to here is that it appears to me that the movement that we're seeing has a lot more to do with the positioning and the movement of larger players than it does any one particular data point. Fair? Stocks making biggest moves in the pre-market: Virgin Galactic, Callaway, Palantir, Mark. Well, so we have some of those on there, right? PLTR is down here. Oh my gosh, PLTR is down 10% overnight. Man. Oh, GameStop is getting pummeled. So, oh man. Oh yeah, they were up at 42 at one point. There is so many people on the subreddit that were in PLTR, you know? They're just getting buried. SNBR, that one is Virgin Galactic, right? But they don't have extended hours, I guess. Yep, we have a lot of Fed speakers. So you guys got to keep me on. We're going to pay attention to the webinar. When we do the webinar, I'm going to pay attention, going to take notes. But then when the news squawk comes on after that and says stuff about the Fed speakers, which is going to be, at like 8:30, we need to be paying attention and seeing the moves that we get off of that. Biden administration considers sharing vaccines with North Korea, says report. Okay. Drunken Mirror, I can't find any period in history where a policy was so out of step with the economy. No. My Kathy Wood investments are getting wrecked. It's interesting to me to see the tweets from Zero Hedge. You know, they will sometimes tweet things that are like a little bit inside. So sometimes I don't 100% know what they're talking about, but I know enough to kind of infer. And it seems to me like Zero Hedge thinks that ARK is just going to completely fall apart, and that at the end of all of this is going to be some huge scandal. That's kind of what they seem to be implying. The number 2 story on Zero Hedge right now. If everyone sees it, is it still a bubble? Yeah. Reflation panic sparks global stock rout. Oh, okay. Tesla shares plunge almost 7% after company reportedly halts plans to expand in China. So I read that in my News Squawk rundown this morning. I didn't catch on that would be part of why their stock is down today. I was just thinking, oh yeah, Tesla needs to go down. Let's do it, you know? There you go. See, hedge fund gross leverage hits all-time high as hedge funds furiously short tech stocks. Are they gonna? I think they'll show you some of these ones in here. There you go. From the Goldman reports, Infotech, the worst performing sector this week, was by far the most net sold sector on the GS Prime book, driven by short sells, outpacing long buys 7-1. Right? So GS Prime, these are guys that I work with, basically, that we supported. They were saying that the order flow going through their systems was 7-1 sells. That's something, right? Now we can get Red Book here, right? Treasury's net selling. Sam T says, I'm suspicious something has blown up, either ARK funds or something else, something tech related. Sam, I think you're on the right track, but I don't think that we need to look for any kind of, it hasn't hit the wire sort of a thing to explain what's going on, per se. These moves are happening too fast. Yeah, maybe. So there's definitely, again, remember, so over the past 2 weeks, they've been selling 7-1. But if we just look at today, okay, if you just look at Tesla being down 7% because they're not going to expand their factory in China. Let's just assume that that's the whole reason why. Okay. And then ARK is getting creamed, and ARK was over leveraged, and it appears, I believe that people are getting out. People are putting are selling their ARK cells, their ARK shares rather. So ARK having to sell all of its holdings in tech, particularly Tesla, I think that alone could probably explain what's going on. So to your point, Sam, I think that we should be looking more for like the next foot to drop, if that happens. Things could get, because we're kind of like in a vulnerable position. When we have an 80% or not 80 point drop, like my immediate thinking is, well, this could position things for a short covering rally. We may see a strong rally today. Like at least this move down that we've had over the last hour, they will probably try and test it at some point, right? But then what after that, right? So we have a move down like that, and then another shoe drops. That suddenly pushes the index down far enough that it's like the whole risk reward setup changes, you know, like there's a certain degree that it has to go down. And what typically happens in this market is that will start to happen and then they'll save it, right? But if it's like if Kathy is going to completely implode, there could be way more to this, right? Because they were managing a lot of money. Like they were the largest exchange traded ETF fund, right? How much money is in them? Well, we'll read that a little bit. I was going to see what else were they saying. Infotech stocks were net sold for a third straight week and saw the largest week-over-week net selling since last August. Net trading flow diverged from a subsector level. Semis and semi-equipment, software, electronic equipment were the most net sold, while communication equipment and IT services were the most net bought. Hedge funds are currently underweight infotech stocks by 1.4% versus the MSCI World, the lowest level since last November and the third percentile over the past 5 years. Okay, remember there was a pretty good rout in November, right? But it was short-lived. From an industry group standpoint, hedge funds are still overweight software and services by 4.7% and underweight semis and semi-equipment and tech hardware by 1.6% and 4.3% respectively. Okay, so that's what's going on there. Now, ARK. Let's see here. ARK readies itself for what could be another tumultuous day on Tuesday, with the firm's assets dropping below $20 billion to their lowest level since January. More eyes are turning to how Cathie Wood is steering her firm through the rough seas. Okay, so how much was... That was like $10 billion, right? Archegios Capital Management, Leverage Bets, and Viacom CBS blew up and ignited a whopping $20 billion wave of forced liquidations at a slew of Wall Street banks. Okay. So Cathie Wood's fund is supposedly the same size as what Archegios, or however you say it. At this point, the chicken and the egg argument between ARK shares of its components, notably held and potentially extremely overvalued names like Tesla and Palantir, and the indices where its components reside become a meaningful conversation and not just fodder. In addition to Tesla shelling off sharply Tuesday morning, as we noted, the other key ARK holdings like Teladoc and Roku were down about 5% in the pre-market session. To make matters potentially worse, it doesn't appear as though Cathie Wood wants to simply batten down the hatches. ARK Invest appeared to continue its strategy of selling off risk-adverse tech names on Monday of this week, with the firm collectively selling 30.4%. Okay, anyways, it's time for us to pull up the webinar, so let's see if we can get into that now. There we go, starting the WebEx thing. Are they making noise? Yeah, it works. Cool. So if you're unable to find the CME webinar, they are going to record it. You can watch it later. So, but I am going to pull out my notes here. ARK isn't leveraged, though. That's true. Zero Hedge tweets, central banks, please help us. Sam says he's long in queue. Okay. We'll see if we get any kind of a reversal, or if they just get routed on the open. This is going to be really interesting. Critical point here this morning, I think. In a U.S. futures contract, which position delivers at expiration, long or short? Short. It's the short. It's the short that delivers. That's why the cheapest to deliver matters, because that's the one that the short that's the one the short is going to give them, because it's the cheapest for him to do. %43% that the futures are cash settled. ARK has 50 billion under management. I don't know. The story I was just reading said 20, but oh man, the dollar's getting creamed here. Well below 90 now. Well, I'm not selling my long stocks, but I plan on holding them forever, right? Probably I'm going to get battered on Sumo Logic, though. Yeah, I was right. It's the short that delivers. Absorbing there at 18.5. %55% of ARC inflows are underwater as they happened after November 2020. Really? Missed it. How much volume are they trading in Tesla and ARC? Oh boy. Tesla's definitely trading. Second question. U.S. Treasury braces. Is the difference between which products? Treasuries versus corporate bonds, Treasury securities versus repo rates. Oh, I had this. The cash price. D. U.S. Treasury cash versus U.S. Treasury futures. Slip there in the E-mini. Oh, did I already submit? It didn't show me. Yeah, okay, whatever. Whatever. It's D. Thinking about long if we break last week's low before market opens, Kevin? They're probably going to get stuck there. Yay! See, I took notes last time. This is why you take notes, guys. Huh? Huh? So mad that I didn't get that fill up there. NASDAQ is soon going to be negative for the year? Really? What's this link? Oh, I see. Oh, you're right. It does take us negative. It's not the same on the E-mini, but I'm so happy the market is down. I hope it will go further. We'll see. That little slip down there at 41.25 is something that could reverse them. Volatility is great to a certain extent. Like last year during the COVID peak, and volatility was horrible. So many limit down days pre-market. You needed huge stops to trade. Yeah. The higher the volatility is, the more money that the retail traders in the futures tend to lose. There's a sweet spot, and we're at, and I think we may have already passed it. Oh, Lucas, so what I have is I have my own indicator on there that calculates the dollar index. So the little chart on the top is the 6E, and the one below it is the dollar index, synthetically calculated, because you can only get the dollar index if you've got bat state or wherever it is. ICE. You have to have ICE. So I calculate it synthetically from the spot futures. Mm. Hmm. I'm looking at this. I'll just close that because. Oh, Jacob, thank you very much. I worked hard on that video, so these next ones should be good. Especially the one about testing. It's not too late to study financial mathematics or statistics. Well, I study it, but I would certainly be ahead of the game if I had gone to school for it. Looks like Tesla's recovering significantly. What softwares would you recommend? Well, I would like to go and run down some of your choices a little bit more, maybe in a future video, but I mostly just use NinjaTrader. Sorry if I'm a little late to answer some of your questions. I'm watching the webinar. So what he's pointing out to us is that especially when you get out into the 30s, the difference between the cheapest to deliver contract and the actual on the run can be more extreme. So look here. Here the on the run versus the cheapest to deliver is pretty tight. maybe 2 basis points difference. And if we go to the 30-year, you've got a 90 percentage point, 90 basis point difference. Oh, no, it's more like 20. I don't know. It looks like they're rearing to be a buy the dip on the open. Would Linux work good for automation? Um, so if you're going to do everything in Python, they would probably be just fine. I would say, though, most trading happens on Windows. Here's the open. Oh, big selling on the open. Well, it looks like they're buying the dip. Wow, volatile. All the way back down now. There was some real absorption up there at the top, by the way. See those thousands up in there? They want the weekly low. Treasuries are coming back now. Hmm. Tenure is heavy. Hmm. Looking bullish. There's a big order up there at 41.45. Let's open up our little thing down here. Tesla is recovering pretty hard, but we'll see what happens if they get up to 630. Hmm. When they sell, the NASDAQ just gets hammered. So he's going to be taking questions in the webinar now. The thing I'm getting from this, he gave us some actual traits. And what I'm gathering from this is, from the way that he's talking about it, there is a lot more data that we could be looking at. Slip there. Still looks like Bulls are winning, but we've got that 41-45 to look at. Okay, here it comes. $100 pulled off of 45. 300 traded. Okay, they traded it. I'm gonna blow through it. There you go. Pretty solid push through there. That might result in them extending up. So head towards the 50 level. Whoosh. Okay, the little slip right there. We're going to get these Jolts jobs openings right here. 5 seconds. Webinar is finishing up. There's so many contracts trading here on the ES. So this move up has been 25K move up. And yesterday was like what? Okay, well they're only recovering about half of yesterday's move, but still there's just an insane number of contracts coming through here. All right, so there, webinar is over. I didn't hear the number. Oh, Jolts came in higher than expected at 8.123 million versus 7.5 million. I guess I would be expected considering that they're all saying, you know, nobody can fill jobs. So I'm going to take a quick break here since that webinar is over, and I'll be right back, and then we'll try and pull something out here. Okay. So we've got Governor Bailey, Bank of England Governor Bailey, and Feds Williams speaking it in 30 minutes. So where we're going from here? How are you going, guys? I did catch that Sam, looks like Sam caught a pretty good winner there off of that, yeah? Are you still in that one? The E-mini is just jumping there pretty hard. It's actually a little bit too exuberant. Yeah, they kind of gonna take it on the nose there a little bit because of that. Oy. So I'm gonna pull this down here so that I can get more granular reads on the buying and selling. We'll move this over here. Yeah, I'm mad about that treasury because, you know, I had a sell and it never got filled. So I decided since I'm only 500 in the queue, I should be able to get up into it. And that didn't work, but then they didn't fill me on the other side and I wasn't paying attention. So that was a bigger loss than it should have been. But maybe not a very good trade anyways. Okay. Sure is choppy here. So I'm gonna exit that one. Some absorption at the 50 level. Jobs openings was a 6 sigma beat. Really? So normally their estimate comes in really close, huh? Okay. There is some selling on the offer here for sure. See that? They're barely able to get above our price there. A lot of contracts trading at 50. Right there. Looks like they probably have enough buyers to overwhelm it, but now they're going to do it at a quarter, huh? Hmm. Yeah, it's coming back pretty hard. There's still a lot of volume coming through in the equities, so it's kind of hard to make a hard read on it, other than going with the momentum. The treasuries are relatively quiet. All right, when that happens, I want out. Nope. E-mini kind of leading the way down on that one. Hmm. Okay. Hmm. Fedsemester says volatility market is only a problem when accompanied by high degrees of leverage. Oh, really? Hmm. Well, Moving pretty random. Look at that. We're like, really? Nope. So there's definitely some defense going on there, but I don't know. It seems like they're having a hard time getting out of that area at 42 after that. Now, there was kind of a slippery spot down here. So that might explain a little bit about why they kind of get pulled back down there. Or flat. That's a real battle, but so far, it seems like the bids pull out. Yeah. What's interesting about tech in the sell-off is that it comes in the face of stable yields, a Fed that is likely on hold, right? See, the explanation that it's rising yields causing a tech sell-off doesn't pass the smell test. You'll blow my nose. Well, I did all of that on the experimental account. Look, that's the... Okay, so we can get a pivot up there. Fed semester current framework would not imply that Federal Reserve is taking on more risks. A little bit of activity going on in the 10-year here between 15.5 and 16. What is that noise I keep hearing that sounds like a ticker? That is the sound of the market depth tape making a sound every time that 100 lot is added or removed. So the market is quite active in that respect today. We could change the filter if we want. Let's up it a little bit to minimum size of like 150. And it'll be a little bit quieter. I'm getting that. But they're getting so... Ah, man. This is very wild here. I'd say very order flow driven at the moment. Nah, I don't care where moving averages and Fibonacci levels are. Discovery Trading Group tweeting the picture of Tesla below 600 and going, imagine that, go figure. Where are they now? They've been recovering pretty good so far, right? Yeah, they're holding 600. They're holding 600. Hey, taking a little breather here. We haven't gotten very many clicks since we changed that, huh? 400 bid there, huh? Look at that, 31.36 and 3/4. Sure. Oh, close. Cool. Slight change in pace there. Still seeing relatively large limit orders being placed. Yeah, they're toying around with the pivots here. Oh man, is this gonna end up being a loser? Yeah, you gotta be kidding me. Ouch, ouch, ouch. It was doing so well too. Nope. Why are you talking about fibs? Unless there is empirical evidence supporting the use of Fibonacci ratios, I don't care. Volume spikes are too much. Yeah, well, I think there's kind of more going on here. Like, look, they want to turn all the way back down. Look, it is completely flipped. Yeah, you're getting those. Look at that. Okay, so somebody decided to buy it, and somebody immediately responded with a sell. Bids took it. The overnight low was 23.25. Shit. Well, look at that. Now that kind of behavior. This is not particularly bullish, but it can flip. If it flips, it can flip up really hard. But that kind of suggests that people are getting a little scared. Maybe people taking on big trades, right? And I'm curious as to why neither the treasuries nor the dollar is responding to all of this madness. Can't we talk about other ways of trading? So you can. You just have to provide empirical evidence. Right? What I don't want is I don't want to be talking about stuff that doesn't have empirical evidence to back it up. That's the problem that I have. Right? Like, we should be careful to not share or teach people things that are not that don't have a factual basis to back them up, right? So the golden ratio and all of the things about numbers is super interesting mathematics, but the question is, does using that to determine a price on the S&P 500 have any efficacy in trading? We should use empirical evidence to determine if that's the case or not. We haven't directly done that one before, so we could test it. Oh, stop. I was playing around, but it's a good idea to know some other pieces of the big picture. Yeah. I mean, it's interesting to know some other levels that other traders might be looking at, but okay, you see that that big old monster in the 5-year? So I detect some steepening coming into the curve. Anyways, when we talk about something like Fibonacci levels, like, what can I say other than I haven't seen any empirical evidence supporting the efficacy of that method? That's all I can say about it, right? Lumber down second day in a row. Has the bubble popped? Asks Zero Hedge. So they did break the low, by the way. What did you say the weekly low was at? Where did Kevin say the weekly low was at? 41.20 and a quarter. No, 41.20 and at 50. So right there. Weekly low. Oh, they've got more. They've got more, yeah. Yep. Treasury ran away from us. It was a good trade. It was a good try. Maybe could have just tried hitting into 15.5. And geez, I have to come out onto like a daily chart now to kind of look at the E-mini, man. Okay, so there is a longer term support zone at 41.09. So I guess that's the next kind of spot we can watch. Have one fib that gets 3 times a week minimum. Well, okay, but what does that mean? I mean, I could probably pick a random number within a certain range of the current price and probably get it to touch once a week, you know? We probably need more than that to base a trade off of it, right? But if we have the stats, we can certainly go into it. It's useful, but I'm just saying we would, to continue with the trade with it, we probably need more. Oh my. Oh my. Okay, so there is definitely, well, I don't know. So earlier, Lucas was saying the volume spikes are too much right now. Something that I find interesting about this is that it's not like they aren't trading many contracts through here, you know? Well, I guess on that drop there, it was kind of light, but I see a lot of people trading this right now. It is just a total brawl. But this is the kind of behavior that you typically see ahead of big drops of excess, right? You get fight like this, it drops crazy, and then later on it could like reverse hard and flip up, and that's the end of it. But kind of the behavior that I might see at lows and not, just off of all-time highs. It's counterintuitive. Some traders believe that when volatility increases, volume traded decreases, but it's the opposite. Yeah, well, it's not that. It's the liquidity is not pulling. The liquidity is pretty much what it normally is. Well, I'm going to get a pivot here. I detect a lot of trend, yeah. But isn't it normally below 100? I guess normally we would be more like 200, huh? So I guess maybe we're down 50. I'm just saying, I'm still seeing it trade 500s at each level. Like, I guess the point is when we see these moves like over here on this chart where it goes like zoop, zoop, like those, right? Those are pretty significant changes in cumulative delta. It's not just happening because the limit orders are pulling. Yeah. So I guess we would just say in this market, market orders are dominant. We have seen limit orders hold spots. I don't know. It's a big mess. How do you what kind of a strategy should you use in this kind of situation? I don't know, man. Right now I'm just getting lucky. I think. I look at this right here. This one's doing pretty well. Luck. It could flip right back on me and go negative again, just like that. Right? Gustavo Magale says none. Yeah, it's Arca Gamma, and what's really behind the QQQ crash? As says Zero Hedge, Nomura's future imbalance monitor showed enormous sell pressure all day in NQ futures across all lot sizes, but particularly in our medium and large lot buckets, proxies for large hedge funds and asset managers aggressively selling and shorting. Two things were behind the QQQ crash: ARK's vicious cycle and CTA deleveraging. Nomura's Charlie Miguelia warns that the monstrous 200 billion ARK active ETF is getting absolutely torched in recent weeks amid negative feedback loop from the mega high growth, high multiple, unprofitable single names. Finally got a fill down there. I'm happy about that. And that blew through that other support area that actually not quite. 4109 is another support level that they're going to be watching. 09, 01, 4100. Are they just going to go straight to 4100? Okay, we need to come and look at what the options say here. That's what we got to do. That's what we're missing. Trading view. Oh my. Okay. One deviation would be 41. Oh, so we're not even to the first deviation yet? Ugh. Two deviation, which I think would be appropriate for today, would be 4080. Oh, man. Well, I campaigned it on this one. I think that I should try and hold it to those targets, yeah? Hobbs, some days even my lucky rocket ship underpants don't help. That's because in overnight, it doesn't move on orders, but it rather moves on orders pulling out of the way completely in prices where you have no orders that are slippage as well. Yes. Well, so we've gone over this before, right? I've shown you this before, Lucas. This chart right here where everywhere that you get one of these little squares is where it moved completely through a price. Look at this. I mean, this is not a mistake. This, I can tell you, this is a property about the limit order book that makes this stuff happen. It doesn't necessarily mean that that it's going to turn, but you get a chance of a turn when you get those. You have a chance of a turn when you get those. Notice that we haven't had one on the way down, though. Actually, when you look at the cumulative delta here, at least on this chart, that it is not decreasing. Isn't that weird? So, yeah, this goes along with what I've been saying here. It's like, when you look at the DOM, it's just volume all over the place. Okay, so 4109 touched. It does appear that there are some technical traders trying to dig it out there. So I think
block sell.
Treasury came back down there, by the way. That was big sell there, in fact. Are they... And what about the dollar? Am I missing something? No, that's fine. Oh, come on, go for it. Nope. Ooh. That might be a spoof. How big of an order is it going to be at 14.5? Okay. Sheesh. Hmm. Technical traders. What I'm getting at is, I come back over here to the daily ES. So when you come over here to the daily ES, the low of the day on February 20th was 41.09. So I believe that you're seeing some technical analysis traders are trying to buy it at that location. Right? And what I'm getting at is, when you look at what the VIX prices in for a possible move based on the options and everything, it could very easily move well past that. So on a break of 41.09, if we come back down and we break 41.09, I want to hit into it. I want to hit into it because we know that those retail traders are going to puke. Now on this over here, I should have moved that up to scratch a long time ago. Okay, see, so as it starts turning back down, you start to get a lot of craziness. I'm 15. Oh, really? Oh, thank you for the reminder. We should be looking at the tile. How much was it that Tesla was the low? It was down 5% at one point. Bloodbath has TSLA drops below 600. I'm going to say dips because it didn't stay. Dips below 600. Now note, coming back over to here, that Tesla is still trying to hold support at 600. So yeah, if this scenario, if the worst case scenario, oh my gosh, are you kidding me? Over here in the treasury. I've just been falling for all their tricks today. Over there. So if our worst case scenario plays out, 4109 drops, do we see Tesla start to fall too? Okay, they let me out. I'm not so sure that I have a trade there anymore. Everything looks even. Boom. Yep. Ba-dum, 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 ba-dum. Ba-dum, 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 ba-dum. $41.05. If we can, please. It might be short-lived. You sold out of all of your ARC positions? Wow. Well, I think I may have missed my... I should have had a limit order sitting out there. Should have, you know... Of course, if that's a retail stop out, go into our 05. Now, the split side of that is that this kind of insanity, we could very easily go to target number 2. In fact, I don't think it would be crazy to be expecting 402, but I wish that I had taken a contract off. Ooh, they're pushing. That stop out though, the stop and run, I mean, maybe it reverses up, I don't know, but that stop out was so incredibly satisfying, wasn't it? I was that move, that break of the lows, that's what I live for, man. That was great. Regardless of what happens here from here on out, that was awesome. That's the one I'm going to go to TikTok and be like, hey, all you guys that bought 4109, guess what? We know exactly what you're doing, and we're selling India. Right into bids, yeah. Although, again, like the target was 05, right? Like the big reason was that we said 05. Like it didn't... I really should have had the order like sitting there. Really should have had the order sitting there. Let's see where they go from here. And there might be like a big, actually probably long after we're going to be gone. It doesn't really matter. I think that this is very clearly a spot where, unless I had had a short all the way up at the top, which I don't know, I don't think that I would have sat in. I don't think that under any circumstances would I have sat around and waited and then tried reversing it up at like 41.50 and holding it all the way. Right. And unless I had done that, I don't think that I would be trading it with a live account. Well, one thing I will say is that since that bounce, the volatility has decreased significantly, yeah? In fact, I think we should turn over here and look at .vix and see, yep, the VIX came off on volatility a ton there. So but let's just remember that with the way that things are going, you know, like it seems like any push of a candle, like if you close below previous candle's low and you get a pivot down, like all that volatility could return back just as quickly, just like when it seemed like they had recovered and then they went back down and hit the 09 very quickly. Gus says I Americanized my... Oh, thank you. Gustavo? I don't think Gustavo is that. Well, probably that's not how you say it, though, huh? Okay, so there's some absorption there in the 20s. See that? Spot right there. You want to watch that. That one guy says guys who scout will have the best time here. Not necessarily true. No, we're right back to where we were before. They're going to try and touch that volatility, the average true range target. So 41.25 or so. Could see a change in character. Where is it? Is it 4080? 40. Well, we'll do exact 40.77. Okay, so we did get a pivot, but it was like very tentative. Weekly low 41.20. They're testing again, dropping below that again. And you probably see a lot of wrangling around that spot, huh? Gus Magellan, the last name. Oh, yes, because what was it before? Magales. Yeah. That's too hard to say. 5 minutes. Okay, I should probably shut down. I don't know what I'm gonna do with it. Doesn't matter. It's not a real account. It's not even on this serious account. So thank you guys very much. If you enjoyed the I see we got a couple new people in here today, so thank you guys for stopping in and saying hi. Make sure you're subscribed and hit the bell icon so you don't miss any streams or one-off of videos that I've done. Make sure you watch the video that I put out yesterday about how to do proper research. And, if you go and find some research and come back and show us what you got, and then we can talk about that. Like some empirical evidence about something that maybe we can use. Because that's what it's really all about, is we all find the little pieces, and then I might know something, and then you might know something. When we put it together, it might actually be something actionable, right? And then we keep it to ourselves because it's just 30 of us in here, right? Anyways, check all the links in the video description. I got to update the video descriptions, but yeah, all those links should be fine. And I will see you guys tomorrow. Stay profitable, friends. Don't blow it. A day like this is when you'll keep trading and you just blow the account. So if you made money or if you lost money, some of the best opportunities are gone. So don't screw yourself over, right? Stay profitable, friends.